This is Seth David for schoolofbookkeeping.com, bringing to you another special screencast. This time we're talking about how to calculate business valuation. In the previous lesson, we took a quick look at valuation and what it really means when somebody says, for example, I'd like $250,000 in exchange for a 20% stake in my company. And I'm using Shark Tank as the example because, of course, it's a popular show and it happens to be one of my favorite shows on TV today. So now I want to talk about how we might come up with the valuation for one of these companies. When these contestants come onto the show, it's a pretty simple formula. If you watch a few episodes, the first thing they do is they state what they want, as we saw in the last video. The next thing they do is talk about the idea. They describe their business and what they're doing, what they're selling, and why they think it's so unique, and so on and so forth. And then, of course, at a certain point, the sharks are going to say, all right, give me the numbers, right? And usually the first two things, and sometimes the only two things they ask for, are sales and net income. I don't think it takes a genius to figure out why. The sharks want to know, if I'm getting a 20% stake in this company, that means I'm getting 20% of the net income. How long is it going to take me to recover my investment? The whole reason somebody like these guys and ladies invest in a company is that they want their money to go to work for them. They don't want to leave it sitting in the bank earning nothing. They want to actually put the money to work for them, which means they want to make their money back and then some. They want to get what's called a return on their investment, or ROI. So a lot of times business valuations are done, from what I've seen, based on some multiple of revenues and, frankly, a lot of hype, right? And that's part of the job. You're trying to sell the idea to somebody. You're trying to get the sharks excited about your idea and get them to want to invest a lot of money for as little of a stake as you can get them to take it for. And they're, of course, on the other end of that stick. They're trying to, they're trying to get you to give them the most for whatever amount of money they're putting in. So I would submit that a good strategy for getting a shark to invest in a company might be to think a little differently. Instead of going based on the hype, instead of going based on the idea even, go based strictly on the fundamentals, on the numbers. And so what I've done here, just for fun, and the template's available for free, is in the second tab. It's the same template. If you downloaded it after watching the first video, it's the same thing. But I laid out a very simple sketch of what a set of projections might look like at the summary level. And in the interest of keeping things simple, just for the sake of illustration, I made it very simple. So you can project the sales growth based on a monthly growth rate. So I've got 5% in here, which means that each month it's going to grow by 5% over the prior month. For some businesses, that might be very accurate. Others, it might be totally aggressive. For others, still might be conservative. And of course, you can come in here and overwrite the numbers with whatever you want if you're trying to look at something like this for your own company. Then I have another assumption about what is our gross profit as a percentage of sales. Another one about what is our general and administrative expenses total as a percentage of the gross profit. Based on that, we calculate the net income. Based on that, we do the cumulative net earnings, so that based on that, we can look at what the shark's stake is going to look like. And then finally down here, we compare that with their investment to see when are they going to make their money back. So according to this model right here, it looks like they're going to make their money back in just a little more than 12 months. Is that good? Is that bad? In a lot of industries, that would actually be a very quick recovery of their investment. So I can't give you a clear answer, yes or no. That's for you to decide. The other thing that's very important to keep in mind is, in reality, if I were doing this, if a company that was going on the Shark Tank hired me to help them put the numbers together and do the valuation, I would be much more detailed than this. We would have a projected income statement, balance sheet, and statement of cash flows, and probably a supporting schedule or two to project the sales to see what we're basing that on, so that at the end of the day, we're going to manage this by the numbers, and ultimately what I want to be able to do is sell it to the sharks based on this, because this is what I know they care about. This is what I would care about if I was investing, is what's my return on investment going to look like? And of course, you can't go showing them a model like this if you can't legitimately support that these numbers are, if anything, conservative. So, but the point is, you can look at this after laying out the scenario and ask yourself, does this look reasonable? Is it realistic? Can I bring them this kind of a return on their investment based on my company, my market, my products, my competition, all the factors that play into a scenario like this? What I would normally do is have the detailed projections and then have those flowing over to a summary like this from the supporting schedules. So this is how I would do it if I was going onto the Shark Tank myself, or for that matter, if somebody hired me to help them before they went onto the Shark Tank, because I would try and value the business from the standpoint of what kind of a return on investment am I ultimately promising the shark who might invest in my company. And I'm going to try and get them excited about that, because that's what's going to ultimately sell the deal after I've sold them on the idea itself. As always, I hope you're having an absolutely fantastic day. If you have any questions, please email me, Seth@schoolofbookkeeping.com, and I look forward to seeing you on the web.